Hello and welcome back to goldstocktrades.com. Today we have a new guest with us, Mark Selby. Mark is Senior Vice President of Business Development at Royal Nickel Corp. Royal Nickel can be traded as RNX on the Toronto, and it also can be traded as RNKLF on the OTCQX. Thanks, Mark, for being here with us today.
No, glad to be here.
Mark, let's focus on the nickel sector.
Yeah.
How is nickel used today? What are the main demand for nickel?
Nickel is very widely used. 70% of it's consumed to make stainless steel, and stainless steel goes into a wide variety of industrial and consumer applications. So it's a really has a very, very solid demand base. The other 30% gets used in a pure form in high nickel alloys to make things like jet engines, gas turbines, nuclear power plants, which is one of the exciting things going forward now is that as the Chinese economy starts to move into more higher value added applications, it's going to use even more and more nickel. So we see even as China slows, because the economy is shifting to those parts of an economy which use a lot more nickel, we see very strong demand growth for nickel, which has continued at almost 8% over the last 5 years annually.
Mark, we're seeing in the news a large source of nickel comes from Indonesia, and the Indonesian government just implemented a ban on ore exports. So what does this mean for the nickel market?
Yeah, no, this is a truly transformative event. I think in terms of I've been in the commodity space since I worked at Inco back in the early 2000s, and I think with one of the top stories in the space. Indonesia supplies anywhere from 25 to 30% of global nickel supply. 2 years ago, we started calling it the Saudi Arabia of the nickel market, just to give investors a reference. But right now, the scale of its importance in the nickel market is equal to all of the OPEC Gulf states. So if you think of Saudi Arabia, Kuwait, and all the oil that comes out of that area, the announcement by Indonesia today that they're banning ore exports is equivalent to all of the OPEC Gulf states saying we're not going to produce oil anymore. So you're seeing a massive amount of supply that'll come out of the market and stay out of the market for the next several years. So we do have a lot of inventory of nickel built up both as nickel on the LME and ore sitting in China. The Chinese stockpiled as much ore as they could in advance of this announcement coming down from the Indonesian government, which was a law passed 5 years ago. That will last only till the second half of next year. And by the second half of next year, we will have worked through all of those stockpiles, and we'll see the nickel shortages, which led to significant, massive price increases in nickel that we saw back in 2005 to 2007 when nickel went all the way up to $20 a pound from $3 a pound previously.
Let's talk about that previous run-up at nickel. You mentioned in the last answer to the last question that you worked for Inco. Can you talk to us about your experiences during that cycle and explain what nickel has done over the past few years and why it should start outperforming once again?
Sure. So I joined Inco back in 2001 as head of market research. I've been following nickel for about a dozen years now. In the first half of this decade, Inco got a lot of recognition for correctly calling the nickel market and China. We realized that analysts were underestimating how fast China could grow and the implications for nickel demand. And while there were a number of projects that were sort of sitting in the project cupboard ready to go, we didn't think any of them were going to be able to make it to the market in time back in 2005-06. And so as a result, we saw, nickel prices had to rise to force demand in line with available supply. So we went from, effectively $3 nickel prices to $20 nickel prices in a very short period of time. As a result of that, we then saw both sort of two factors which have sort of hung over the nickel market since then. Again, like everything, it's a cyclical business. So that large rise in prices led to the project cupboard being empty, as a number of projects were then announced in 2007, and those have been ramping up over the last few years. It also saw the development of what's called nickel pig iron in China. So that's where, and this is where Indonesia became a big factor in the market. Is you saw millions of tons of basically soggy dirt with about 30 pounds of nickel in it per ton going to China to be processed into material that could be used for stainless steel. And so, over the last 3 or 4 years, nickel has definitely and at least been out of favor. But now with this ban on ore exports from Indonesia, we're seeing an absolutely fundamental nickel shift. So, nickel went through this big boom, which we correctly called Inco back in the middle part of the decade. I left Inco in 2007 and actually made a lot of money shorting nickel because I saw the rise of nickel pig iron in China and the development of all these projects which are going to overhang the market. And today, we think we're going to go into a period into the second half of this decade, starting now, where we're going to see the same phenomena happen, where prices will have to rise to force demand in line with available supply.
What about the concerns that the Philippines, the laterites could supply could help supply the shortfall?
Yeah, no, that's geologically. Indonesia is the only place where you have large quantities of high-grade saprolite ore. So there's a great presentation by Glencore, who's one of the larger producers in the space, who sort of clearly laid out what the relative resource bases are, and we know from our experience at Inco what's out there. The Philippines, at best, could replace 10 to 20% of the high-grade ore that's currently being produced out of Indonesia. So you're still looking at a net decrease, of about 20% in global supply. They have some lower-grade material available, and again, if that needed to come into the market to balance the market, which is likely going to happen, you'd need nickel prices, at that $9 or $10 a pound or $20,000 a plus a ton at least to start making some of that economically justifiable. There is no other large-scale source of high-grade saprolite ore that the kind that Chinese have been using for the last 3 years available in the world.
So let's talk and focus on Royal Nickel's Dumont Nickel Project.
Yep.
Talk to us about the highlights of why this project should come into construction and eventually production.
Yeah. So I'll talk about the context in the nickel space first, and then the specifics of the project, why we think it's not just a great nickel project, but a great base metal project. First off, in terms of the nickel context, that spike in nickel prices back in the middle of the last decade led to an emptying of the project cupboard. So even without this news from Indonesia, we were very bullish on the later half of this decade. When our project would come into production, we were targeting construction late this year with first production in 2016. We need sort of 2 or 3 scale Dumont projects each year just to balance the market, and there's literally only 3 or 4 projects in total in the project cupboard that could come into production before the end of this decade. The project itself, we're in the Abitibi region in Quebec. We have all of the infrastructure in place. So unlike a lot of base metal projects up in the Andes in Chile and Peru, where you're looking at $3 to $5 billion to build it, or the Labrador iron ore trough, where you need to build all the rail infrastructure to get there, we have all that infrastructure in place. So we're able to build a large-scale base metal project that will be one of the top 5 nickel sulfide projects in the world with 33-year mine life for just over $1 billion of initial investment capital. And we spend another $700 million 5 years out to double it in size. This is one of these assets that, we have 1 billion tons of reserve, another 1 billion tons of resource, and the deposit is open at depth across 7 kilometers. So this is, truly one of these multi-decade, expansion type projects. We'll be at the 30th percentile of the cost curve, so just outside the first quartile of the cost curve, so very well positioned to be profitable across the entire cycle. Even today, at today's nickel prices, we would still be generating 30 to 40% EBITDA margins. The other thing I think, as a factor, yesterday's announcement by Goldcorp of an acquisition, they were looking everywhere in the world for gold projects, and they chose a large-scale, low-grade open pit in the Abitibi region of Cisco to acquire. Where we are, as a we're basically a similar base metal project. We're going to be a large-scale, low-grade open pit. They obviously were attracted to the structurally low-cost benefits of being in a place like the Abitibi. If that's where they chose to make a hostile acquisition, which you don't see very often. So we think that reads through very, very, very well for our project. And we think when the development cycle turns, and it will, not just in nickel, but across all base metals, there's been very few projects that have been financed over the last few years. We've raised $100 million over the last 4 years to get this project to this point. And so when the techs, First Quantums, and so forth need their next project, we'll be one of the few projects that's shovel ready to go.
Mark, tell us about other highlights of Royal Nickel, such as the management team, the experienced management team, and your current treasury.
Sure. No, again, one of the things I think that makes us stand out from the rest of the junior mining pack, the board of the company is the former senior management team, the CEO, COO, and chief marketing officer of Inco. With that board, and then the management team itself is also made up of senior managers from Inco and Falconbridge. Where that is helpful is, one, in terms of financing a project like this, we get inbound requests from the project finance banks. They see the quality of the project and the quality of the team, so that is a massive advantage versus most junior mining companies. We have experience from exploration right through to markets and marketing. So again, we're not just a geologist or mining engineer who's trying to promote a project. We have all the capability of building this project in-house, and we'll also sell it at the right price. And then in terms of treasury, we've been very, again, a lot of junior mining companies are, getting down to the last few cents. As of the end of the third quarter, we had $15 million in the bank. We still have, the vast majority of that as of the end of the fourth quarter, and we'll have sufficient cash to see us well into 2015. So we'll have the time to be able to take advantage of this nickel cycle as it unfolds, and hopefully deliver some very, very significant shareholder returns during that time period.
Mark Selby, Senior Vice President of Business Development at Royal Nickel, which can be traded as RNX on the Toronto or as RNKLF on the OTCQX. Thank you so much for joining us today.
No, I'm glad to take the time.